Welcome back to my channel, fellow investors. In this video, I'm going to be covering the big software company Adobe. You likely have heard of Adobe. If you've done a PDF, you've used Adobe software. Photoshop is really popular, as well as video recording applications. Now they have an AI application, Firefly, which should be really exciting. I've used it. It was pretty neat. I used the free trial. Overall, Adobe's been a great company for many years. They've provided software that millions of people have really appreciated and liked. And their stock took a big hit on Friday. It went down 13% on the announcement of their earnings, and more specifically, the announcement of their forecast. The street was expecting them to really announce that, hey, our revenue is going to increase substantially due to AI. I guess NVIDIA is an example of that. NVIDIA growing 265% if you compare the most recent quarter to the previous year. That's just incredible growth. Well, Adobe came in with 11% growth, which is very good for a software company of their size. But the street was expecting, for Adobe to really swing for the fences and grow much faster, I guess. I wanted to take a look at Adobe and value the company myself based on the free cash flows that Adobe provides, as well as the earnings per share it generates. And then valuing the company, I can compare it to the current stock price and see if it's a good buy for my portfolio. I'm a value investor and I love tech, but I like buying it at a discount so I can see my investment go up in value over time. I'll go through it, take a look at the company, and tell you what I like, maybe dislike about the company, see if I really like the company enough to be a part owner. I'll look at their balance sheet and see if their balance sheet's in good health. I'll run a valuation, and then I'll make a decision whether I'm going to buy, hold, or sell Adobe. The fundamentals for Adobe look good. The company has a $223 billion market cap. They had a really good day of trading today. Today's March 18th, 2024. The stock is up more than 4%. The company has $19.4 billion of revenue. So you're paying about 11 times revenue for the company. And they have good net income of $5.4 billion. Forward PE of 28 is very good for a growing software company that has a AI business. I think it's a very good PE, and they've been profitable generating free cash. Many analysts cover Adobe overall. They have a buy rating. They have a price target of $611, which is a very good target compared to their current stock price of $513, showing that there may be a good discount offered on Adobe. Looking at the 5-day, they had a bad Friday. They had their stock go down more than 13%. And it was because investors expected the company was going to really benefit from AI very quickly, similar to what NVIDIA experienced. But that wasn't the case. They're going to have more slower, moderate growth. And the street was disappointed. But if you look at for the year, the company's doing really well. They have about a 40% increase. If you look at the stock price today compared to the stock price a year ago, you're doing really well with Adobe. Over the last 5 years, what I like showing is that, hey, their peak was at $688 per share, and it really went down. Value investors could have picked up shares at $275 per share and really made some money as you saw the stock price really go up to $513. So overall, value investors can really pick up technology stocks like this one at a really good price if you're just patient, you do your analysis, you wait for a stock price to really get into that zone and buy it at a discount. I'm going to value Adobe by looking at the free cash flows I expect the company is going to produce in the future and discounting those free cash flows to today's value. To begin with, in 2023, the company had really good cash flows, and I'm going to grow those cash flows by 10%, which is going to be the growth rate I'm going to use for the first 4 years. I grow the first 4 years by 10%, and then terminal value, all cash flows beyond year 4, I'm going to grow up 5%, which is a good growth. And both numbers I think are conservative, because historically the company's grown free cash flows by 18%. If you look at the last 5 years, and if you look at the most recent year, they're growing their revenues by 11%. So those are good. That's a good, steady, conservative forecast on their cash flows. Now I'm going to discount all those free cash flows by 8% and get to a net present value of all those cash flows of $271 billion. I'm going to add the cash on the balance sheet and take away debt, which is going to give me a $275 billion equity value. The market cap is $223 billion. So if we compare the per share value of the stock versus the stock price today, we have about a 17% discount on Adobe stock available if we use free cash flows. Now, earnings per share is going to be $18.30 per share. I'm going to use a PE of 36, which is reasonable. This is a growing software company, really good space, really good profitable company. And I am going to grow their earnings per share by 5%. I get a value per share of $538 per share. Stock is trading at $513. So there's about a 5% discount using earnings per share. Blended, I get about a 13% discount on Adobe. This is a high quality company. I believe number one in their category is software. So this is a great company to own. And it's currently given a pretty nice little discount on a great company. So should I buy Adobe stock or stay away? Well, let me look at the three things I look at in a stock before I buy it. First, do I really like the company? Do I want to be a part owner? Second, do I look at the balance sheet and make sure it's a really good sound balance sheet? And third, am I getting a discount or a fair price on a great company? And to begin with, the company is excellent. Excellent products, excellent management, just a lot of intellectual property, a lot of things going for Adobe, including they could have a pretty good AI business in the future. The balance sheet's great. They have more cash than they have debt. So a very strong balance sheet and well below 3 times EBITDA in the debt column. And there's a discount available on a great company. So on down days, I'm going to be a buyer of Adobe stock, picking up shares at a good price and holding them over the long haul. Picking up really good quality companies, it takes patience, it takes research. As I showed with the Adobe 5-year chart, the company was as high as $688 per share, but it went way down, well below $300 a share not too long ago. So it's a matter of following a stock, waiting for it to come into a really good acquisition price, and then buying those shares and holding them long term. That's my play as a long term value investor. I aim to make a lot of money, and one way of doing so is by owning quality companies like Adobe long term, but very importantly, buying them at a very good price. I hope you found my video interesting, and I really appreciate you watching.